If you're new to the world of cryptocurrencies, it can be hard to figure out how to buy Bitcoin, Dogecoin, Ethereum, and other coins at first. Lucky for us, it's not too hard to figure out what to do. Follow these 5 easy steps to start investing in cryptocurrency. But before we start our video, please subscribe to our YouTube channel and press the bell icon. Choose a broker or crypto exchange. To buy cryptocurrency, you must first choose a broker or a cryptocurrency exchange. Either way, you can buy cryptocurrency, but there are a few key differences to keep in mind. What is an exchange for cryptocurrency? A cryptocurrency exchange is a place where people who want to buy or sell cryptocurrencies can meet. Exchanges often have low fees, but they tend to have more complicated interfaces with different types of trades and advanced performance charts, which can be scary for people who are new to investing in cryptocurrency. Coinbase, Gemini, and Binance US are 3 of the most well-known places to buy and sell cryptocurrency. Even though these companies' standard trading interfaces might be too complicated for beginners, especially those who have never traded stocks before, they also have easy-to-use ways to buy stocks. However, the beginner-friendly options cost a lot more than it would cost to buy the same cryptocurrency through each platform's standard trading interface. To save money, you might want to learn how to use the standard trading platforms before or soon after you buy your first cryptocurrency. If you're new to crypto, you should make sure that the exchange or brokerage you choose lets you transfer and buy with fiat currencies and US dollars. Some exchanges only let you buy crypto with another crypto. This means you'd have to find another exchange to buy the tokens your preferred exchange accepts before you could start trading crypto on that platform. What is a cryptocurrency broker? Brokers make it easy to buy cryptocurrency by giving you easy-to-use interfaces that talk to exchanges on your behalf. Some have more expensive fees than others. Others say they are free, but they make money by selling information about what you and other traders are buying and selling to large brokerages or funds, or by not executing your trade at the best possible market price. 2 of the most well-known crypto brokers are Robinhood and SoFi. Brokers are convenient, but you have to be careful with them because you may not be able to move your cryptocurrency holdings off the platform. At Robinhood and SoFi, for example, you can't move your crypto out of your account. This may not seem like a big deal, but experienced crypto investors prefer to store their coins in crypto wallets for extra security. For even more security, some people choose hardware crypto wallets that aren't connected to the internet. Create and verify your account. Once you choose a cryptocurrency broker or exchange, you can sign up to open an account. Depending on the platform and how much you want to buy, you may need to prove who you are. This is a very important step to take to stop fraud and meet federal regulations. Until you go through the verification process, you might not be able to buy or sell cryptocurrency. The platform might ask you to upload a copy of your driver's license or passport, or it might even ask you to upload a selfie to show that your face matches the one on the documents. Deposit cash to invest. Make sure you have money in your account before you buy crypto. You could put money into your cryptocurrency account by linking it to your bank account, giving permission for a wire transfer, or even using a debit or credit card. Depending on the exchange or broker and how you fund your account, you may have to wait a few days before you can buy cryptocurrency with the money you deposit. Here's one big buyer beware. Some exchanges or brokers let you put money on them with a credit card, but it's very risky and expensive to do so. When you buy cryptocurrency with a credit card, the credit card company treats it as a cash advance. This means that the interest rates on cash advances are higher than those on regular purchases, and you'll have to pay more cash advance fees. For example, when you get a cash advance, you may have to pay 5% of the amount you are taking out. This is in addition to any fees that your cryptocurrency exchange or brokerage may charge. These fees can be up to 5%, so you could lose up to 10% of your cryptocurrency purchase to fees. Place your cryptocurrency order. When you have money in your account, you can place your first order for cryptocurrency. There are a lot of different cryptocurrencies to choose from well-known ones like Bitcoin and Ethereum to less well-known ones like Theta Fuel and Holo. When you decide which cryptocurrency you want to buy, you can enter its ticker symbol, BTC for Bitcoin, for example, and the number of coins you want to buy. Most exchanges and brokers let you buy fractional shares of cryptocurrency. This lets you buy a tiny piece of high-priced tokens like Bitcoin or Ethereum that would cost you thousands of dollars to buy otherwise. Based on market capitalization, the following are the symbols for the 10 largest cryptocurrencies. Middle.Bitcoin, BTC. Middle.Ethereum, ETH. Middle.tether, USDT. Middle.coin Binance, BNB. Middle.cardano, ADA. Middle.dogecoin, DOGE. Middle.xrp, XRP. Middle.USD coin, USDC. Middle.polkadot, DOT. Middle.uniswap, UNI. Select a storage method. Exchanges for cryptocurrencies don't have protections like the Federal Deposit Insurance Corporation, FDIC, so they could be stolen from or hacked. You could even lose your investment if you forget or lose the codes that let you get into your account. This has already happened with millions of dollars worth of Bitcoin. That's why it's so important to keep your cryptocurrencies in a safe place. As was already said, if you buy cryptocurrency through a broker, you may not have much or any say over how your cryptocurrency is stored. Buying cryptocurrency through an exchange gives you more choices. Let the cryptocurrency stay on the exchange. When you buy cryptocurrency, it is usually kept in a crypto wallet that is connected to the exchange. If you don't like the provider your exchange works with or you want to move it somewhere safer, you could move it off the exchange and into a separate hot or cold wallet. You might have to pay a small fee to do this, depending on the exchange and how much money you want to send. Hot wallets. These are crypto wallets that are stored online and can be used on tablets, computers, and phones that can connect to the internet. Hot wallets are easy to use, but because they are still connected to the internet, they are more likely to be stolen. Cold wallets. Because they aren't connected to the internet, cold crypto wallets are the safest way to store cryptocurrency. They are outside of the computer and look like USB drives or hard drives. You have to be careful with cold wallets, though. If you lose the key code or the device breaks or fails, you may never be able to get your cryptocurrency back. Even though the same thing could happen with some hot wallets, there are also some that are run by people who can help you get back into your account if you get locked out. Alternatives: ways to buy cryptocurrency. Buying cryptocurrency is a popular thing to do right now, but it's a volatile and risky way to invest. If you don't want to buy Bitcoin or other cryptocurrencies on an exchange or through a broker, you can invest in Bitcoin and other cryptocurrencies in other ways. Wait for exchange-traded crypto funds, ETFs. ETFs are a very popular way to invest because they let you buy hundreds of different investments all at once. This means that they offer immediate diversification and are less risky than investing in individual investments. There is a huge demand for cryptocurrency exchange-traded funds, ETFs, which let you invest in a lot of cryptocurrencies at once. At the moment, regular investors can't buy cryptocurrency ETFs, but that could change soon. As of June 2021, the U.S. Securities and Exchange Commission, SEC, is looking at 3 applications from CryptCoin, Van Eck, and Wisdom Tree for cryptocurrency ETFs. Invest in companies connected to cryptocurrency. If you'd rather invest in companies that have real products or services and are regulated, but you still want to get into the cryptocurrency market, you can buy stocks of companies that use or own cryptocurrencies and the blockchain that powers them. To buy shares in public companies like NVIDIA, NVDA. This tech company makes and sells graphics processing units, which are at the heart of the systems used to mine cryptocurrency. PayPal, PYPL. This payments platform was already a popular way for people to buy things online or send money to family and friends. Recently, it added the ability to buy and sell certain cryptocurrencies with PayPal and Venmo accounts. Square. Since October 2020, this company that helps small businesses with payments has bought more than $220 million in Bitcoin. In February 2021, the company said that about 5% of the cash on its balance sheet was in Bitcoin. People can also buy, sell, and store cryptocurrency with Square's Cash App. Before you invest in cryptocurrency or in companies that have a lot of money in it, you should think about your investment goals and your current financial situation. Cryptocurrency is a very risky investment because its price can change a lot. For example, a single tweet can cause its price to drop by a lot. This means you should be careful and cautious with your investments. Still have any question in your mind? Leave a comment below and we will try to answer you as soon as possible. Also, don't forget to subscribe our channel for more crypto related videos. Press the bell icon for all the latest updates.